Welcome to the weekly markets update. I'm Marit Sagarishvili, investment consultant at Kamak Retirement Group. Today, we're recapping what moved the markets from September 14th to September 18th. Stocks declined for the third consecutive week, with the S&P 500 index down 0.6%. The performance of the equity benchmarks have been driven lower by the recent sell-off in technology stocks. The quarterly expiration of key futures and options contracts, also known as quadruple witching, increased volatility at the close of the week. The big tech market leaders continue to give up some of the ground as investors have started to pay attention to high concentration levels of the top 5 stocks in S&P 500 index and their trophy valuations. Since the beginning of September, investors have rotated out of high-flying technology stocks into industrials, materials, and value stocks, which have lagged considerably during the massive rally of the March lows. Green bonds get a significant boost from Europe. European Union is showing leadership and commitment on the climate front. This week, the European Union announced it is considering selling green bonds as part of its €750 billion pandemic recovery fund. This move would significantly boost the green bond market, which has already seen huge demand and tremendous growth in recent years. The Federal Reserve maintained its dovish stand at the policy meeting this week, signaling that interest rates will remain near zero through at least 2023 to help the U.S. economic recovery from the pandemic. Big changes were noted in the Fed's economic forecasts. Policymakers now project unemployment at 7.6% at the end of 2020, down from 9.3% back in June, and calendar year growth at -3.7%, up from -6.5% in June. Retail sales bounced back to the pre-pandemic level just a few months after slumping to a 7-year low after coronavirus forced a widespread shutdown U.S. economy. Consumer spending makes up 70% of U.S. economic growth. However, weaker than expected August report suggests the easy gains are behind us now that the government's $600 week pandemic unemployment assistance checks have ended. U.S. jobless claims remain below the 1 million mark for the third consecutive week, falling slightly to 860,000. While the gradual improvement is encouraging, the current reading remains higher than the claims filed in the worst week during the Great Recession. Continuing claims, the total number of Americans receiving unemployment benefits also modestly declined to 12.7 million. The University of Michigan Consumer Sentiment Index rose to 78.9, its highest level since March. While the improvement is encouraging, the index remains well below the 100 level that prevailed before the pandemic. Thank you for watching. For questions, please visit our website, kamakretirement.com.